So if you're a Nasdaq trader or just trading any index, you're going to want to spread your positions out over the course of any bull run or any real drop due to some sort of market fear, be it geopolitical or economic, like the tariff rules going out at the moment. And if you're using hedging specifically, that couldn't be more relevant because you need to really scale in and out of the markets as they rise and fall. Hedging is a really, really good way to do this. It gives you a lot of control and allows you to sort of mitigate your risk in many different ways. This is another video where I'll show you another back test and ending in full net gains. These are quite a cappella, I just pick a date and just get rolling. I do it in every single video. If you go and watch that across this channel, you'll see that repeatedly. Let's jump into another one. Welcome to this video. We're going to run through a hedging approach on the Nasdaq, the NAS 100. You can see I've not done a video on the Nasdaq yet and how to really utilize hedging as a strategy rather than using stop losses. If you do watch across this YouTube channel, you will notice that frequently, every single video, I'm ending any market move in net gains. So that means it doesn't matter how far the market moves up, down, sideways, my risk is controlled because of my hedge approach and my sizes. This is something I've mastered over a good period of time. And it's like that for my co-founder as well, who also teaches this alongside me, and our most respectable and profitable students, which we trained ourselves to get to the income trading level. So trading completely full time. So if I look at the Nasdaq and where it's fallen to, I've just loaded this to the oldest data. It would allow me on FX Tester. You can see we're coming to an area of historic support. You can see previous price action levels across the board and a big rush down on the very near term. So that could transpire into a further push down. And for that reason, I'm going to be a bit more careful. And I'm just going to take something really light. So 0.1 based on the settings on FX Tester for this asset and the symbol properties. So if I take that 0.1, I can see I'm starting to gain a bit of drawdown. As a max size, I'm going to go for 0.3, just to give everyone a really clear idea of how sizing sort of works. You can put your size much higher or much lower. It just depends on your approach and how many assets you have. So by the end of the video, you'll be able to gauge really what it would have been like for you based on 100k equity. So I'm going to put the remainder of my max size just a bit lower, and that's going to be my first overall full position. So I've just been filled on that. I've got a drawdown now of about $700. So nothing really serious at all. And if this pops up, I'll be able to take long side gains on that larger entry like this. So I can kill that one off like that. And I can actually just immediately hedge this former 0.1. So I'm going to hedge that to 100% ratio because they're both light sizes. And it's just in case the market begins to downtrend. So it just starts to pull to the downside on continued negative sentiment for the Nasdaq. So it would have been something perhaps economically or geopolitically that reflects fear and a dumping of risk, because indice markets typically are risk assets. So if I take off this one, I'm not sure if it put my short in actually. Oh, it did. The lines are just a little bit faint. So if I take that one, I've got a P&L now of $169, and I'm slightly out the money on that former short. I'm just going to add another 0.1. Okay, so I've got two 0.1s in play, and this one's got about $135 on it. So I'll close that as well. I can add another 0.1 long this time. And what I'm doing is it's more or less because I've traded my eye for a long time. But if I swap down to my lower time frames, I can see that the long side momentum is beginning. But I can also judge that from the daily because you can see the rejection on that former wick as well. It tells me the same sort of information. So I've got gains on that former short, and I'm now losing money on this long. I don't want to hedge this long because I don't need to. I've only got a small amount of exposure at this point. And on that pop from that long I just took, okay, down here, I could hold it a bit more in case we get a push up again. Struggling a bit, so I think I'll kill it. No. Okay, so that's decent. So 294 there. And I've now only got a small drawdown on that one. Now, some people think this is just, or I've seen people say in the comments, it's just random positions. That is absolute nonsense. There is no way I could be taking random positions on every video and end in net gains every time. They are full calculated and judged positions for accuracy. Okay, so that means I'm scaling in and out of the market appropriately at any time based on former entries and where the market stands at that point. That's how I'm now $1,031 up. Okay, it's not a coincidence and it's not random entries. It just wouldn't work if they were random. So we're now left with this 0.1 long, and on a push up, I can kill it if it pushes up, which it doesn't look like it is, and on a push down, I can add. Now, it's worth mentioning as well, it looks random to the untrained eye and the inexperienced eye because it's new. And a lot of people get really scared about new things, new suggestions, new ideas, different ways of trading. Wow, suddenly we're not using a stop loss. Can you believe it? People get really worried about the prospect of change. And if something isn't working for you already, then you've got no choice, really. You've sort of got to change. I suppose it goes for anything in life. But there's no good just looking and thinking, oh, this is just this or that or whatever you think it is, because it's probably not. So a short side hedge there got me $254. That covers some of the risk on this one. And I can actually just add another 0.1 short. So now what's really interesting is you can see I'm now up on this one, so I can close that for gains. And this one is now out the money. Now, my former gain of 334 I just took comes after the gain just before a 254. So I've basically, I've almost got my money back on this overall move. But because this market is shaking to the downside, I could add another 0.1 here, okay, as a light size. And then if we push any higher, which you haven't yet, I can consider adding more higher up. But at this point, price looks supported on a drop down. So I'm going to take a 0.1 long. I'm going to kill that off now for gains. And yes, the drawdown is climbing on that former short, but the whole point of what I'm doing here, the whole point of our hedging strategy is basically to make money as the market goes against you. Okay, so that's how you're existing or thriving rather without a stop loss. So at this point, I've just added 3 0.1s in total. So my max size is now filled. And my job really is going to be to reduce, as and when the market goes against me. So I've got two gains there of $100 and $439. I can now add another long just to hedge that former short I took down here. And my balance is still rising, so I can take that off. And now if I want, I could just close that out and I'd still be in net gains. Okay, a P&L of $2,000 now, so 2%. But I don't want to do that. I'm going to add another short. And then if the market drifts a little bit more, I can add another one. So this push now is going to give us a chance to begin to look at how we would hedge out of these losses. So we've got building losses here. Okay, we've got some gains in the bank, which is sustaining some of the drawdown. But we've got a position at 4279, another one at 4364. And I could add if I wanted short again now, but I don't think I'm going to. And I'm just going to hedge on a fall. So can you see how I've popped back to that support? The push up has given me a hedge entry. And that hedge entry is going to cover sort of, how much is that? So if I scroll down slightly, so I've got $291 there. If I close that, and let's round it to 300, that is about 1/13 of my overall drawdown. So already I've suckered away 1/13 of the problem. And I've just placed another buy order at a similar point. So any other drop down like that is going to fill me. And then anything lower, I can add again. And what's going to happen is my short side drawdown is going to fade and my long side drawdown would grow. But in this case, that's another hedge gain of 417. So now if you add my last one, 417 plus 300 is 717. And 717 out of 300, okay, is almost a quarter of the drawdown. So already climbing well. So now what's happening is my long side entry should go into gains. If we keep going up, which is going to cover my risk a bit. So we've fallen now, so I'm going to hedge again long to cover those short entries. And any really, really vicious push to the downside is going to allow me to exit my shorts and change long again. So I've now got $400, so that's 1117 or 1,100 of my total $3,000 risk. So about a third I've now covered overall on drawdown wise. If I swap long again, that's a minor gain there, so I'll just take that. And now I can really just make myself a bit more comfortable. So that is a push back to the highs. I can close that out. So basically, instead of losing on these shorts directly, I've managed to cover a lot of the risk by hedging long within this price movement, because the market hasn't just kept going up in a straight line. It has gone sideways, it's gone up, it's gone down, and all of that provides a lot of opportunity to take hedge gains, where they become available. So I can keep hedging long, so that if we pop away like that, I can take another $300. And at this point, if I wanted to, because I'm now net P&L, I'm net green, okay, on a gain of almost $5,000, I could add short if I wanted to again, because I've got 1, 2, and then 3 would be a spacing, if you like. So the first entry, 4279. So I'd be coming up for $300 between my first 0.1 and my last. So I'm just going to take another. So I've maxed at 0.3 at this point. Okay, so I can be wary on adding anything else. And that's a really nice fall there for a gain of 650. And I can add long there, take another 124. And now it's all really piling in. And if I wanted to, I could close that, and net gains again, like every single video I film, are available. Okay, so it really is as simple as that. My eye is obviously trained. I can do this quickly. But if you want to learn to trade for income in a different way, in a much more controlled way and sensible way, go underneath. I know it sounds counterintuitive, but if you remove the stop loss, it can help a lot. Thanks for watching, guys. See you in the next one.